gold is basically money. You buy gold for prudence, for safety, for insurance, for savings. That's why you buy gold. So yeah, what is it? I don't know what it is, 2,600 today or whatever it is. It doesn't matter. These things fluctuate. But it's to set aside wealth that you can deploy in the future towards something you want or something that's productive. It's just a way to, keep your powder dry. That's why you buy gold. And yes, so the answer is yes, you should be buying it now. Not all at once, but every month. That's how you save. You don't save with US or Canadian dollars. That's a mug's game. You save in gold. I've been saving in gold for, Jesus, I can't believe it, 50 years.
Gold intrigues financial experts with its enduring value and complex role in wealth preservation. Renowned investment strategist DougCasey offers a compelling perspective, emphasizing gold not as a speculative instrument, but as a fundamental form of money designed for prudence and long-term financial security. Current market dynamics appear to validate Casey's long-term view. Gold prices have recently surged above $2,650, demonstrating increased safe haven demand and technical buying interest. This market movement coincides with growing global economic uncertainties, underscoring gold's persistent appeal as a protective financial instrument. The narrative surrounding gold remains nuanced. Manoj Trivedi of Jama Wealth offers a contrasting perspective, characterizing gold as a speculative asset while academically recognizing it as an alternative currency and value store. This viewpoint highlights the ongoing debate about gold's precise financial categorization. Casey's long-standing belief in gold as a reliable savings vehicle aligns with research substantiating its strategic importance in managing currency exchange risks. His 50-year commitment to holding gold reflects a strategy of regularly buying gold to safeguard wealth from currency devaluation, particularly of the US or Canadian dollar. Academic studies analyzing gold currency portfolios reveal its potential to reduce portfolio variance, especially during challenging periods like the COVID-19 pandemic. However, the hedging effectiveness is not absolute, with performance varying under different geopolitical conditions. For investors seeking speculative opportunities, Casey suggests focusing on mining stocks. He notes that Canada alone has around 2,700 such stocks, comprising exploration companies, development projects, and a few producers. In Casey's view, these stocks, rather than gold's price itself, represent the true speculative frontier for investors. Before we dive into this video, please subscribe to our channel, hit the bell icon, and share these videos with your friends.
You should not treat gold now as a speculative vehicle. You should treat it the way it has been, a very good speculative vehicle at times in the past. But gold is basically money. You buy gold for prudence, for safety, for insurance, for savings. That's why you buy gold. So yeah, what is it? I don't know what it is, 2,600 today or whatever it is. It doesn't matter. These things fluctuate. But it's to set aside wealth that you can deploy in the future towards something you want or something that's productive. It's just a way to, keep your powder dry. That's why you buy gold. And yes, so the answer is yes, you should be buying it now. Not all at once, but every month. That's how you save. You don't save with US or Canadian dollars. That's a mug's game. You save in gold. I've been saving in gold for, Jesus, I can't believe it, 50 years. And I've never sold an ounce. And it's treated me very well as a savings vehicle, and it will continue to. That's what people should do with gold. Now, if you want to speculate on the price of gold, you've got, I think, what's the number, 2,700 mining stocks in Canada. Or they say they're mining stocks. They're mostly exploration stocks, few development stocks, some producers. But that's what you should do if you want to speculate. Actually, the only way I invest in gold stocks personally, because I'm in a position to, is I do financings. These companies they're money pits. They're always burning money because they're out looking for stuff. They don't find it. But we need more money to keep the lights on, keep the geologists paid. So that's what I do. And I can buy the stock in large blocks, which doesn't suit most people, obviously. But when I do, I can get a discount to the market, and I can get a warrant to allow me to buy more stock in case they get lucky in the future for anywhere from 2 years to 5 years. So, the gold mining stock market has actually been okay, not great, but okay to me over the last 3 or 4 or 5 years. But I think that the worm will turn, and at some point, people are going to say, gotta have these crazy little crappy gold stocks. And they'll go 10 to 1 again, like as a group. They have 5 times, actually, since 1971 when gold was freed up, or the dollar was first devalued, I should say, by the Nixon administration. I think the Vietnamese are part of it too. Who wants a Vietnamese dong? Who wants to hold on to that? It's being inflated out of existence. You don't want to be paid with that. And what are the Vietnamese going to pay with? What are the Brazilians going to pay with? Nobody wants to hold on to a South American country's currency. That's goofy. So what are you going to pay with? Dollars? No, don't want to use dollars. They're going to wind up using gold.
DougCasey emphasizes the indispensable nature of gold and silver in high-tech applications, highlighting the unique physical properties that make them irreplaceable in modern industry. Silver stands out for its exceptional electrical conductivity, making it a critical component in electronic devices and vehicle manufacturing. Silver's importance grows even more significant as the world transitions towards electric vehicles, particularly in charging infrastructure development. Its natural resistance to oxidation and ability to maintain performance under challenging conditions make it an ideal material for these advancing technologies. Gold's value in industrial applications stems from its remarkable corrosion resistance and low electrical resistance. These properties make it essential for manufacturing reliable connectors, switches, and printed circuit boards. Casey also points to a notable disconnect between rising gold prices and the underperformance of gold mining stocks. He attributes this divergence to several factors, primarily the growing influence of ESG and DEI movements, which have cast the mining industry in an unfavorable light. The challenges facing mining companies have been further compounded by significant increases in all-in sustaining costs during 2022 and 2023. This combination of rising operational expenses and social pressures has created a perfect storm, diminishing investor confidence in the sector. As a result, gold mining shares have consistently underperformed relative to the price of physical gold itself. Let's get back to the video.
I thought that the gold stocks would have been off and running long before. Now they haven't, because gold's been moving up so much. You'd think the people would do this. The reason that, well, let me put it this way. The reason they haven't moved, it turns out, is because of the rise of this insane ESG DEI movement. Gold mining, or mining in general, actually, is considered a very non-PC business. You're raping Mother Earth. You're making the bugs and the bunnies unhappy when you have big yellow machines, digging holes in the ground and stuff like that. So the big money has stayed far away from it because it's a man's business, basically, too. And you're not supposed to be a man anymore. It's supposed to, I don't know, we're supposed to get all kinds of black women as geologists all of a sudden out there doing this. So that's one reason why gold stocks have not run. Another reason is that tech stocks have run. And any young person saying, hey, I'd much rather take a shot at $1 billion playing on my computer, like, Bill Gates or Elon Musk or a bunch of other guys that have made lots of money doing that, then go out and play around in the dirt with big yellow machines. So that's another reason why people are just not interested in it. It's got a bad reputation, for the reasons that I just mentioned. That's going to change, because if you want the world to continue the way it is, you need metals. I mean, you need lots and lots of copper for the so-called electrification of the world. You want your EV to be chargeable? Well, you're going to need copper and cobalt and tantalum and lithium, and just a whole bunch of these things, in addition to gold and in addition to silver, which are incidentally both high-tech metals. Gold is the most non-degradable, the most inert of all the naturally occurring elements, which is a big plus. And silver is the most reflective and the most conductive of all the metals. So they're not going away, purely technological reasons, although it's not really important in gold's case. It is for silver. People think it's impossible for the US government to default because they can print up money as much as they want to pay off their debt, to cover their interest rate. Incidentally, the US government is paying over $1 trillion a year right now in interest on its debt alone. And as they roll over their current debt, it's going to be rolled over at much higher interest rates. And as I said, my prediction, for what it's worth, is that interest rates are going much higher in correspondence with inflation. So that $1 trillion in interest by the time Trump is out of office, plus more debt, of course, which has to be paid interest on, it's going to be $2 trillion in interest alone. So why should the government default? Well, it will default eventually. There's two ways it can default. One, the dishonest way, which is printing up money until we get into the situation that Argentina has gotten into, where I am right now. That's the worst thing that they can do. That's catastrophic because it impoverishes the average guy who cannot save money because he basically just, if he can save money, and it's hard because prices go up faster than wages, but if he saves money, it's being inflated away out from under him. And eventually, if the dollar catastrophically loses value, that's going to create chaos in the US. When we have a runaway inflation in places like Zimbabwe, it's a horrific disaster. In Argentina, horrific disaster.
Gold and silver are fundamental to the stability and progression of modern technology. Gold's enduring properties, such as its corrosion resistance and inertness, make it a crucial component in ensuring the long-term reliability of high-tech systems. Silver, with its exceptional conductivity and durability, complements this by providing essential properties supporting innovative technologies' growth. As technology advances, the demand for gold and silver will likely grow. What do you think? Will these metals become even more essential? Share your thoughts in the comments below. We'd love to hear from you. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell for more content. Thank you for watching.